Hi, Rick Elmendorf here, and in today's video we're going to be discussing page 2 of the loan estimate. This is part 2 of a 3-part series titled Keys to Understanding the Loan Estimate. I will be going down and giving you pretty much the only things you need to pay attention to on page 2, as well as some tips that you can use to compare lenders using this form. Okay, let's get started. Now, page 2 of the loan estimate is broken out into 3 sections: the loan costs, other costs, and calculating your cash to close. So under loan costs, now loan costs are not actually your lender's cost. That is a cost to get a loan. Now, the first thing I wanted to mention is a tip to use this form in comparing lenders. The only thing you need to be worried about are sections A, B, and then your lender credits found in section J. Everything else from lender to lender is going to be exactly the same. So if you're using a loan estimate to compare lenders, only focus on section A, B, and the lender credits. Everything else is going to be the same. Okay, with that said, let's go ahead and get started into the meat of the video. Okay, so loan costs, they're broken out into origination charges, services you cannot shop for, and services you can shop for. Under origination charges, now I will tell you that the CFPB says the best way to tell if you have a competitive loan offer is to compare loan estimates. This is 100% true. Loan estimates do not lie. Now, if you're looking at a loan estimate, you're probably not the first time you're seeing numbers from your lender. And you may have seen numbers from many lenders, but it hasn't been a loan estimate. Probably been looking at closing cost worksheets. And this is the preferred method that lenders like to use in giving numbers to people, because a loan estimate means you've actually applied. So comparing multiple loan estimates means you've actually applied with multiple lenders, which is typically a no-no. I mean, you can do it, but most lenders don't like to do it just for comparative purposes. They'd rather issue you a closing cost worksheet. But any of it, under the origination charges, it's broken down into points, and then any other fees that the lender's charging, these are going directly to the lender. So the first thing to check on this page is, does your loan include points? If it does, it means that you're typically buying your loan interest rate below market. Okay, and that's going to be listed there. And the rest of those, application fee, you don't really see anymore. And there are a lot of these are state dependent, but more than likely the rest of the origination charges, underwriting, processing, whatever, are going to be lumped into one fee called an origination charge. I've seen it. Okay, section B. Services you cannot shop for. Now that's kind of rude, right? Well, yes, these are services you are not allowed to shop for these. Well, that's because the lender is the ones that has this agreement with these third parties, whether it's an appraisal, credit report fee, flood, and all the other little nidnung fees that you have to pay getting a loan. So these actually can differ from lender to lender, which is why I said this is one of the items you need to be looking at when comparing lenders, but they're not going to vary much. Okay. Thirdly are the services you can shop for. These are good to review because these are typically title company fees. If you're buying a house, your realtor is going to give you a title contact and refer somebody that he or she has worked with. That's totally fine. Again, you're not going to see a massive variance here, but these are services you can in fact shop for. Okay, so if you total all the loan costs, which are not just lender costs, these are costs to get a loan, this will end up totaling this section D, loan cost. Now, let's proceed. The second section is other costs. Now, other costs are broken up into, let's see, 1, 2, 3, 4, 5 different sections. Well, really only 4. So the first section is taxes and other government fees. This is really the taxes you pay when you record the mortgage. And on a purchase, you're going to have transfer taxes because you're moving from one owner to the next. You'll have those transfer taxes. And in many states across the country for a refinance, you're going to pay those recording fees and transfer taxes again. So go figure. Well, not transfer taxes, but it's recording fees. Okay, the next 2 sections, prepaids and initial escrows, are really not closing costs. I dealt with this in part 1 a little bit, but prepaids are monies that you prepay. It's your money going to pay things that you needed to pay for anyway, being a homeowner. Okay, so let's look at some of these things. So the main one is your homeowners insurance premium. Now, you're probably going to look at this and go, wait, 6 months? On a purchase, it's going to be 12 months. You always have to have a full year paid up when you do a new loan. So obviously, if you didn't have an insurance policy on a particular house, you're buying a house, it's going to be 12 months. If you're refinancing and maybe you're halfway throughout the year, your lender's going to want to know that you have a full year paid in advance. That's where that money comes in. Okay? And the rest of those things, prepaids, I did want to touch about prepaid interest because that depends on the day of the month that you close. So if you close, let's say on the 15th of the month, what's going to happen is your lender's going to collect interest from the day that you close through the end of that month, and then they're going to skip a month and your mortgage payment will be due on the following month. So if you were closing, let's say today, I'm making this video on 28 July, you will have 1, 2, 3 days of prepaid interest in July. You will skip August, and your first payment will be due on 1 September. That's how prepaids work. The next part is taxes. Make sure your taxes are accurate. This is the escrow that your lender collects at closing to make sure they have enough kind of padding as to say, to make sure when your hazard insurance bill is paid by your lender, your tax bill is paid by your lender, that you have enough money there. And on a refinance, you're probably going to see a little bit more of a tax escrow number because your lenders they're paying off an old one. You have an escrow balance there, which will come back to you. They're trying to fill your escrow account to make sure it has enough for when your taxes are due the next time. Now, the next section I don't want to skip over here, which is this other section called Owner's Title Insurance Policy. Now, I'm going to probably have title companies flame me in the comments, so please don't. But Owner's Title Policy is optional and is going to be a pretty big number when you purchase a house. On a refinance, those are typically reissued, so you're not going to see a charge on that. Lender's insurance is always required. Title insurance for owners is optional. I'm not a huge fan of owner's title policies unless you're buying a new construction or a foreclosure or maybe a house that just had a lot of work done or a major renovation. You got to watch out for, or if you bought in some area that you have to really kind of worry about, title of the land. But otherwise, I've never in 26 years of doing mortgages, I've seen an owner's policy be enacted to protect the homeowner, but that's just me. Anyhow, it's peace of mind. It's still not a bad idea to get it. So I'm not like telling people you shouldn't get it. I'm just saying that I personally have not gotten it in the past. Okay. The last thing you want to look for really is your lender credits. This is the last item that is going to be important for you to be watching for when you're comparing mortgage rates. Is any lender credits you're getting. It will be listed there. Also, make sure that lender credit that was shown to you on your closing cost worksheet appears here on your loan estimate, because if it doesn't, it was never there in the first place. Okay, and the last thing is that you just make sure that your cash needed to close is as expected. This will be the number that comes from page 1 of the loan estimate. So this is the amount that you will need at closing. It has everything in there. Your deposit, if you made an earnest money deposit for your home purchase, any seller concessions, any other credits that are be given to you at closing, it's all in there. So if this number is wrong, raise the red flag, deal with that with your lender right away. So anyway, I hope this video was helpful. If you did like the content, please consider giving me a like. It does help me out a lot. And consider subscribing to my channel as well for more mortgage content. My name again is Rick Elmendorf, and I will see you on the next video. Thanks, and have a great day.